Do What Works. That is the name of our latest training, and it is available for you. If you look in the show notes, you will find a link to it. It's all about how great these weekly charts are, particularly. Remember, the bigger the chart, the bigger the dollars, because bigger charts have bigger moves. And of course, we have eminently chartable ETFs, both in the S&P 500, the NASDAQ 100, 20-year bonds, and gold. That gold chart is just gorgeous. The reason I'm saying it's gorgeous is because these are charts that work, and they work almost every time. That's why we want you to practice with us. We want you to prove to yourself that you get this. It will be easier for some, harder for others. It takes 10 minutes a day studying with us, practicing these methods, getting good at being able to accurately read these charts. Jump into up moves, jump into down moves with inverse ETFs, and see how well you can master the market. Do not spend a single penny. Don't even think about it until you're able to combine all the knowledge you have from all the things you've studied and you've practiced. And everybody develops their own method of trading. I don't think anybody lock, stock, barrel follows everything that someone says. You need to find out what your specialty is, what you're good at, what you like to do, what ETFs or stocks you like to follow, and develop your own trading method. But that's only going to happen if you practice, and if you practice every day. If you're not willing to spend 10 minutes a day with us, then you don't need to spend any time with us, because nothing good is going to happen to you. You're going to be happenstance. Yes, when the market's rising like it has been for 8 weeks, everybody's a genius. Everybody's good. But wait till we get to the summer doldrums when things start getting jerky back and forth. You don't know what's happening, what's going on. That's why we practice 10 minutes a day, every day. That's why we have daily market worksheets, weekly market worksheets, trade worksheets. Those PDFs are in the show notes every day, available for free. Plus training at the website to show you how to use those things. So again, if you're just getting into what we do, into learning how to stock chart, what you need to do is go once a day, okay? Just go through the trainings that we have. Get a notebook out. Take notes. Start understanding what's going on. Knock out the training videos we have. Listen to us every day. Practice trade. Take down your daily market worksheet. Think about this stuff. And over the course of time, it'll take longer for others, shorter for some. But again, if you practice trade and if you train with us 10 minutes a day, you can do this. If you're not willing to do that, you just want to feel good about things and try every now and then, and oh, it works great when the market's going up. Sure, but work it, practice it. You can do this. I don't care if you have a PhD or you have a high school diploma. Some of the best people I know in investing didn't even graduate high school. And again, it takes dedication, it takes common sense, and it takes a work ethic. And if you can do that, you can master this. And it's not about listening to the news, reading the Wall Street Journal, or having some degree in business. I can assure you, I have degrees in business. I have both postgraduate and graduate degrees. I learned nothing about the market until I started doing it on my own. You can do this too. Stay with us. Practice with us. You'll get it. Let's look at what's going on. The S&P 500 down for the day, 0.61%. We see a pullback underway. I don't know how long it's going to last. I can't tell you. I can't read minds. But I can't read the market. I can't forecast exactly what's going to happen. But I can darn sure follow a trend. And what we see happening is the trend is slacking off. After 8 weeks of solid up movement, we see the derivative oscillator losing energy, price percent oscillator losing energy, red open box candle meaning indecision. 2-day chart. We can see it's been sliding sideways now for 8 days. This latest 2-day candle is a red spinning top, means indecision, tending down, pushing through the 2-day trend line. Derivative oscillator losing lots of energy. Price percent oscillator heading down. No crossover yet. What does that mean? When we look at the 4-hour chart, big down movement in the morning, bigger in the afternoon. Derivative oscillator gaining momentum. Price percent oscillator heading down. Now, what happens if we have big days the rest of this week? Could the 4-hour chart crossover going up and give us the ability to jump in? Sure it could, because the 2-day and the weekly still in confirmed up moves. Could that happen? Yeah. Is it likely? Well, I don't know. Maybe not. But if it does happen, be ready for it. Let's go back to the weekly, head on to the other stock index that we follow, the Qs, the NASDAQ 100, the tech stocks. We still have a green up candle there with a higher high than the prior week. Derivative oscillator, however, has lost a little bit of momentum. So has the price percent oscillator. We go from the weekly to the 2-day. And again, we see that as far as this latest 2-day candle goes, it has not reached a higher high than the prior 2-day candle. So again, you can tell that when you look at the oscillators continuing to lose energy on the derivative oscillator, price percent oscillator, actually not just sliding sideways, but tending down, getting closer to the red signal line. When it crosses over that, it means no more up trade for us because the 2-day and the weekly have to be going in the same direction. 4-hour chart, down in the morning, even more down in the afternoon, pushing through the 2-day trend line. If that 4-hour chart crossed over going up, of course, that would give us an opportunity to jump into a Q's trade. So we'll see how things shake out. Just continue to watch, and remember, we trend follow. Go from stocks to bonds, up 0.37%, going into the second week of down move. Now, if you look at that bottom wick on the candle, it's not gone lower than the prior week. That's one reason we don't have a weekly vertical crossover yet. Derivative oscillator's gone negative, but not that all-important price percent oscillator. Could happen by the end of the week, not happened yet. We look at the latest 2-day candle, that tells you even more. That 2-day candle is actually a green up candle now. It's totally consumed by the prior down candle. That's why the derivative oscillator is continuing to gain oscillation moving down, and the price percent oscillator is still heading down. Price movement is below the 2-day trend line. We go from the 2-day chart to the 4-hour. 4 hours crossed over going up. Hasn't penetrated that 2-day down trend line yet, but we'll just watch, wait, and see. And again, got a little bit of schizophrenia going on. Remember, the weekly's confirmed up still, 2 days confirmed down, so we don't have a trade in bonds. We're just waiting to see how things are going to sort out and whether we're going to be telling you there's a weekly vertical crossover at the end of the week. Hasn't happened yet. May not happen. If it does, we'll let you know. What's going on gold? Gold down 0.09%. Now, this is interesting. On the weekly chart, we have had gold in a confirmed up move since when? October the 5th. Is that not crazy? If you had jumped in that following week somewhere around the, we'll just say even the high. Okay, this is the high. The worst spot you could get to on gold, it would be it would be the next week, somewhere the high, 116, okay? What does gold hit as the highest high? 127.21. Now that's, what, $11? That's pretty darn good since October, isn't it? That's how good our gold chart is. You can go back and track, and you will find few times that this gold chart is not absolutely gorgeous. If you like gold, you're fascinated by gold, you want to know what gold is doing, look at our gold chart. What do we see our gold chart doing? Well, starting to roll over, isn't it? Hasn't crossed over going down yet. Might be happening soon. Big down candle forming for this week. 2 days already crossed over. We'll let you know by the end of the week if we have a crossover. Might not happen this week. Might not happen next week. But if and when it does, we'll let you know of that power movement. Because once we have vertical crossovers on the gold chart, tends to mean we're going to have sustained movement for quite a while. We've got 6 days of decent down movement in gold. Now, what does that mean, though, when we say we have a crossover going down? How do you make money, again, virtual dollars, in something going down? Well, if I remember correctly off the top of my head, DGZ, I believe that's correct, is one of the down the inverse funds in gold. I hope I'm right. Call myself that. I'm right. It moves the opposite of gold. So you jump into DGZ in a practice trade and you can ride it up. So again, that's an inverse fund. Now again, not as liquid as we would like, but again, it's something you can practice trade if you so desire. If we have a confirmed down move in gold, hasn't happened yet. Looks like it might happen in the near future. 2-day chart already crossed over going down back on the 2-day candle ending Thursday, the 28th of February. 6 days of down movement. And again, we're just tracking that. Somebody caught me. I had drawn, and I appreciate it. You guys are the best. I had drawn, remember, when we draw candlesticks, bottom up, top down, I had put the, not candlesticks, when we draw trend lines on candlesticks. When it's going down, you draw your trend line from the top. When it's going up, you draw it from the bottom. I'd put this trend line underneath, which was completely wrong. That's what makes trend lines worthwhile when they're drawn correctly. Derivative oscillator gaining downward momentum, price percent oscillator heading down strongly. We go from the 2-day to the 4-hour, and is this down move bottoming out a little bit? Well, it's hit it now for about 2 days. Actually, you can add another half day in there if you look back on the morning of Monday the 4th. Is gold going to take a rest from going down? Could be. That's why we're not seeing a crossover going down yet in gold. Let's just sort of see what we see happen there. Gold has had a big, fast drop. So we'll wait and see just what gold is going to do for us. Folks, that's where we are as we end the day on Wednesday, go into Thursday, the 7th of March. Man, the time just keeps flying by. But keep training, stay positive, stay motivated. You can do this, and it is so much fun to have successful trades. Doesn't it feel great when you see those green numbers instead of red numbers continue to move up, up, up? We've also got a great training I'll put at the end of the video today. It's a training about how to use your freestockcharts.com and your TC2000 trading space to actually track trades. It's so easy to do. You simply enter the 3-digit symbol for the gold, 20-year bonds, QQQ, or SPY. You enter that the day that and that minute that you enter the trade, and it will help you keep up with how good or poorly you've done in that practice trade. It's very simple, very easy to use, and it's another way that you can help track your progress. And I will put that at the end of the show today, and I'll also drop it in somewhere during the video. And again, if you want to find that, you can always look that up. It's a simple tracking method, I believe is what the video is. Look that up at the website. But again, everybody who subscribes, it'll be listed in your show notes. If you're not a subscriber, go do it. If you've not purchased our book, you want to know what we really do here, 8th printing of our book. Please, if you live overseas, send us an email. We'll send you a PayPal invoice. Otherwise, follow the link in the show notes if you live in the States, and we will be happy to get you your copy out autographed, signed, everything. We'll get it in the mail to you. The price includes delivered. So again, love to hear from you. Love to get that to you. We had a great patron call in today, great patron Q&A, question and answer with the patrons' questions. If you want to be a Patreon supporter, just follow the link to the Patreon page. And again, with your monthly pledge to support us, we'll give you special trainings that we provide only to our Patreon members. But again, if you can't afford that, if you're just someone struggling right now trying to figure out what's going on, you have what you need there at the page, at the website, chartingwealth.com, and in your daily email, which we send out to you for free. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.